Hey traders, Jason here from Leavitt Brothers. In this video I'm going to talk about how the market is becoming increasingly controlled by a small number of groups. You'd think half the groups would outperform and the other half would underperform, and the S&P would be the average right in the middle. That's what a market is. But in today's market, only two groups are outperforming and everything else is lagging. Okay, so the question is this an issue? Is this something we should be concerned about? Let's check out some relative strength charts to illustrate what I'm talking about, and then I could briefly discuss whether it may or may not be an issue. Okay, so let's go through them. Okay, so here's the S&P 500 overall. Long term it's doing fine, uptrend solidly in place. Over the last 5-6 months, it's more neutral, up down, trading in a range. 50-day moving average has moved up, then moved down. Now it's moving up. It's pretty neutral overall. Which is perfectly fine. Okay, small caps are doing well, large caps are just kind of consolidating within a solid uptrend. All right, now let's look at the individual S&P select groups and how they are performing relative to the S&P. So here's consumer discretionary. Up top in all these charts is going to be the group chart, and then down below is the relative strength chart relative to the S&P 500. So you can see starting last November it outperformed, then it traded on par with the market for a couple months, and it's been outperforming for the last 5-6 weeks. Okay, so it's doing really well. This is one of the groups that is leading the market. Amazon is one of its components, and it's one of the groups. It's one of the groups that is outperforming. Okay, next, energy. Energy has been feast or famine. Okay, it is underperformed by a wide margin. It's outperformed by a wide margin. It just goes back and forth. It doesn't move. It's not something that has moved slowly and gracefully relative to the market. It's either done extremely well or extremely poor. Right now it's lagging some. Okay, is it an issue overall? Well, I think it's actually doing okay up here. Okay, it based here, it moved up. Now I consider it to be in a consolidation pattern within this short-term uptrend. So despite the fact that it's lagging, I think the group is doing okay. So any type of talk about hey, if energy is lagging, that means demand is low. That means the economy is starting to slow. I don't know. I mean, the XLE is actually holding up pretty well. So it's underperforming, but the stock's doing okay anyways. Financials, the group has been drifting down, so it's obviously been underperforming with the small caps up at new highs and the large caps having broken out recently. It's underperforming. The relative strength chart has been declining for about 4 months. Okay, this is a little bit of an issue. Financials tend to move on par with the S&P. Okay, there's a very high correlation between the S&P 500 and financials. The fact that the financials are lagging is an issue. So it's definitely notable. Okay, some other groups lag, not a big deal because they're small, they don't really matter. Financials lag, it is a little bit of an issue. Okay, here's healthcare. Was weak, popped out, got some support here at the 50. Now it's, short term it's in an uptrend since the, beginning of May, but relative to the overall market, it is still lagging. Okay, not doing great relative to the market. Here's industrials. Like healthcare, it tried to kind of jump out of a falling wedge pattern, but it's been lagging. Okay, I mean, it tried to jump out and then it put in a double top. It tried to jump out, got support at the 50, put in a double top, and now with today, it just gapped down and sold off hard underneath its 50. So overall, it's neutral, but it's weaker than the market, and it's been weaker than the market this entire year. Okay, in fact, its underperformance is actually accelerating. It's been accelerating like the last 2 months. Materials move down in a wide range, move up, or now moving up in a wide range, but regardless of that movement, the group has underperformed, not just all year, but going back to like November. Okay, there was a little bit of outperformance here in the beginning of April, but generally speaking, it's been underperforming. Real estate has been gently moving up, and it did pop off at the relative strength chart, did pop off a low late March, but it has been underperforming also. Okay, despite the fact that it's doing okay. Consumer staples has been, the group's been underperforming for a long time. Okay, whether it be grocery stores and those kind of stocks, the Procter and Gamble's of the world, the Cokes and Pepsi's of the world, they've been underperforming for a really long time. You definitely do not want to have money working in the group, because they, the stock itself has been, it's one thing for it to be underperforming, but the stock could still, the group could still be moving up. The S&P could be up 10%, this group could be up 5%. So sometimes you could still make money playing a group that's underperforming. This group's underperforming and it's been moving down. It's just been a place that you wanted to completely avoid. Tech's been a big winner. Okay, the group has moved up, pretty much. Moved up, traded in a range for a couple months, broke out recently, and is now trading in a smaller range up here. It has been, outperforming the market for a long time. Okay, this has been what's been going on. Obviously, with Apple, Microsoft, Facebook, Google, they've all, they've had their little struggles here and there, but overall, the group has done extremely well. Tech is carrying the market. It's been carrying the market for a long time. And this is one of the issues. A lot of people talked about, like, the FANG stocks in the past, where all the market cap gains from the S&P were concentrated in Facebook and Amazon and Netflix and Google. This is where it comes from. Tech has been in leading and doing really well. Last one, utilities. I know there are studies out there talking about the movement of utilities relative to the market and what it means. The group is not that big. It's highly regulated. I don't know if the movement actually implies that much. It had underperformed for a long time, then it popped up, but now it's been underperforming again. So if I were to summarize all this, this is what's going on. Tech and consumer discretionary are outperforming. Energy, financials, healthcare, and industrials, materials, real estate, consumer staples, utilities are underperforming. Okay, so you might look at this and say, this is like a barbell thing. Shouldn't it be half and half? Shouldn't half the groups be leading, half the groups be lagging, and the S&P is right in the middle? Like, can this last? I mean, can you have a couple groups carrying the load? My take, one second here. My take, and this is just my opinion, is that it's not as big of an issue as people think. Okay. Tech is filled with massive conglomerates. Okay, Microsoft by itself is at least 10 mid-sized companies. Okay, Apple is 2. So is Google. So is Facebook. Okay, given the market cap of these companies, if tech is up and a few of these other groups are down, at worst that would be a draw. Okay, but if tech is up enough, and it's been up enough, that results in an up market. Okay, the tech group is so big that it really does equal several of these other groups. So yeah, if you were looking at, like, let's say the AD line, the advanced decline line of these groups, there's only 10 groups here. Obviously decliners would be winning, but if you consider the size and how big tech is, the situation isn't as dire as it seems. In fact, it's probably not as dire at all. Shouldn't the movement of Apple be worth the movement of several hundred smaller companies in another group, purely from a size and influence standpoint? Like, I think so. Okay. And it's why I'm not overly concerned that the market gains are concentrated in these groups, because these groups are so big and these stocks are so big, and they're one of these big companies is like dozens of smaller companies. Okay, my only real concern is the financials. They don't need to lead, but it would be nice if they at least traded on par with the S&P. Okay, so that's all I have. Thanks for listening. If you like the video and want me to do more, give it a like. Share it, with your trading friends. You can also subscribe to our channel right here at YouTube. Come check us out at Leavitt Brothers, leavittbrothers.com, leavittbrothers.net, where we provide trading ideas and market analysis. Again, thanks for listening, and I'll see you next time.